So part of the reason that stock is actually moving higher this morning is because you gave some pretty upbeat retail commentary. And I think that got a lot of folks' attention, given the fact that we are seeing this big spike in unemployment and what is really essentially consensus view from economists that we're already in a recession in the midst of this coronavirus outbreak. What are you seeing, and where are you seeing that demand?
You know, Morgan, I actually agree with the economists that we likely are in a recession, and we are prepared for that. We've taken a lot of costs, almost $120 million of operating expense out. And we planned for the second quarter retail sales to be down, and partly probably because of the stimulus, partly because people want to use our products to social distance and get outside. We reported this morning that through yesterday, off-road vehicles, which is our largest segment, was up 15% or mid-teens percent through April year over year. So really encouraged by how our dealers are handling this, and we've launched some innovative ways with a click-buy rides to make it easier for people to use access to the dealers to buy products. But really encouraged by and surprised by the demand early on in April.
Where do you think that demand is coming from? I mean, we're talking about Polaris is known for these big ticket discretionary items. You just mentioned the off-road vehicles. You also sell things like Indian motorcycles, boats. What do you think is fueling it right now? Is it a pull forward in demand? Is it discounting? Is it something else?
Well, it's not discounting because we've actually lowered our promotional levels year over year. We believe it really is an opportunity. And if you think about where the hot spots for COVID-19, and our sympathies go out to all those affected by it, but the hot spots are not correlated well with where we have most of our riding areas and most of the demand for our products. So we think a lot of the areas in states that are less impacted, people do want to get outside. And, our tagline is think outside and enjoy our products. It's a way to be out with your families and those that you social distance with. So we believe we're offering an opportunity for people to recreate in this environment where there aren't many other options.
Yeah, to your point about the hot spots, at a time where I think both the general public and the markets are so focused on the reopening of local economies right now and what that looks like on a state-by-state basis, 85% of your dealers are already open and operating. What does that process look like, and how are they handling potential customers right now?
It was when we pulled our guidance, it was such a shock to the system, and many of our dealers were not able to operate. But as the CISA rules came out and we started to understand how we fit, most of our power sports dealers have been able to operate. But certainly we've helped them with what we've learned about social distancing, cleanliness, just all of the protocols for dealing with COVID-19. They are implementing. We've helped our dealers with scheduling of customers to come in to buy products, and really made it as a comfortable feeling for our customers in the buying process as we possibly can. And that's been helpful to us. But really the dealer closures were, I think they maxed out at down 27%. Now it's down less than 15%. And we're seeing more and more of those come back. On the boat side of the business, consumer demand has been pretty good, but we've had more dealers that were not able to open in the boat segment than the other parts of the business.
Hi, good morning, Scott. It's John Fort. Help us understand what's happening with your workforce right now. You say you've taken out $120 million worth of annualized operating expenses. OPEX will be cut 25% in the second quarter. I believe you've announced furloughs, but what's happened with layoffs, and the furloughs imply that you're bringing those people back?
Yeah, we did. We've taken some we pride ourselves on our culture and our team, and it's always disappointing when we have to part ways with our teammates. But as we looked at the demand environment and we dealt with what we believe is going to have to be taken, we did take a number of reductions in force throughout the first part of this year. And we also asked those that were staying around to take a 2-week furlough in the second quarter to help us manage our liquidity and cash flow. We've asked a lot of our employees, but as I said in my earnings speech this morning, they have really stepped up in a major way to make sure that we can deliver for our dealers and our customers, and really proud of the way this team has operated early on in this pandemic.
Hey, Scott, I don't know. When it comes to components and supply chains, there's been so many stories about Mexico, for example, not being willing to open their factories, a shortage of motors. To what degree is that a headwind?
It's certainly a headwind, Carl. And, it started out, this whole pandemic started with supply chain issues with China, and we worked through those. And then it was problems in Italy, and now it's problems in Mexico. India was in there as well. We are working very hard with our partners. National Association of Manufacturers has been very helpful to try to make sure that we can get Mexico and our supply chain and our plant there opened as quickly as possible. But certainly if that stays shut for a lengthy period of time, it could be problematic. But we've worked through this in every other country that it's happened, and we're confident that we can work through it in Mexico as well.
So, Scott, just to bring this full circle, the fact that you believe that we're already in a recession right now, you've been taking these actions with the company, with the balance sheet to prepare for that. How long do you anticipate this playing out? What does it mean from a consumer appetite standpoint? And how does it compare to previous recessions that you've been through with Polaris?
Well, the last recession was a little bit different because we had a good bit of lead up to it. We saw when Lehman failed, there was a couple of months before the real things. And as we budgeted for 2009, we had kind of foresight into what to expect. This was a stoppage of commerce almost immediately, which caused us to react very fast. We believe that we've got our liquidity, we've got our cost situation in pretty good shape. So we are prepared to endure a fairly lengthy recession. We've publicly said we believe this is a U recovery, and I don't know how long the bottom of that U is going to be, but we'll be ready for it. And again, we're encouraged by the early signs of demand in April, and we're not confident that that's going to continue, but certainly there's more consumer strength and demand for, the opportunity to get outside than we had anticipated. But, we're prepared for the worst, and we'll be ready for the best.